Kitco News, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.
It's not entirely hopeless for investors yet, despite the grim macroeconomic picture that we're facing today. We just have to be in the right places. This is the theme of our discussion with Andrew O'Donnell. He is the founder of Market Mindset, a newsletter focusing on the mining market. And we'll be talking about mining, but more broadly, the macroeconomic picture and what to do with our investments at large. Andrew, welcome to Kitco. You're the first interview at the Vancouver Resource Investment Conference. Welcome to the show.
It's a real thrill, and it's a real pleasure to meet you, David. I really appreciate you having me on, and it's exciting being the first person to talk to, because it's that kind of ambivalent moment of we're in a chaotic time, and it's pretty painful right now, but at the same time, I've got a lot of hope for the future. And I guess the topic of my talk and what I want to get across to people is, let's acknowledge a lot of the negative. I mean, let's not put our head in the sand.
Let's get that out of the way first.
We'll acknowledge it, but let's also then keep a firm focus on the opportunity moving ahead.
As we're speaking today on Tuesday, actually stocks are rebounding. The NASDAQ's up 3%, 2.5% as of this morning's open. And people are wondering whether or not this is the inflection point. Maybe the correction's over, people are starting to be hopeful, or maybe people are just buying cheap and there's more pain ahead. What do you think about the broader markets overall? Well, we'll get that out of the way first.
I'll be honest, I think there's more pain ahead.
Okay.
So I'm not that optimistic on the markets as a whole. I think there's enough negative where there's still some things to iron out and there's pain. But that being said, within that, there's always going to be opportunities for people. And it's really a time for people to really hone in on why do they own something. Mm-hmm. You know, I ask that of people on a lot of different companies. And if they just say, well, I want to make money or make a certain percentage rate of return, I think that's challenging.
Yes.
For us is that we look at a business. Like, of course, we want to get a great rate of return, but we're more focused on the entire management and the business that they're in, and if they've kind of answered a lot of these key themes. Supply chain issues, have they addressed inflation, how they're going to challenge those challenges moving forward.
Yeah.
So a lot of those issues that we're identifying that sound kind of morbid whenever people listen to the show or listen to me today might think, that's a lot to take in, Andrew. That's kind of negative, is that there is opportunity in that negative.
You know, Walmart missed earnings, and part of the reason was costs went up and their margins shrunk considerably. Walmart, one of the shops with the most secure, the most advanced supply chain logistics in the world, arguably, and even they're suffering. So this is hitting everybody. What can companies do now to, I guess, on an individual micro basis, fix this problem for the company?
On those large multinationals, it's challenging because part of me thinks that this global model that's what's being challenged and being changed. And we try to avoid a lot of the, as fun as they are, the conspiracies out there, and we look at the different groups involved and whatnot. It's fun, it's an intellectual experience to kind of have some themes thrown at you, but I like companies that are in a region that desperately need the resources. So if it's lithium, and it's battery energy metals, I want copper, I want lithium in North America. And I'm of the case of the in my backyard crew, is that we want that in our backyard because we've got great regulations here in Canada already. But if we have a say in that development and everyone feels like they've got a part in it, even places like California and their need for silver for solar panels that they've already said have to be in all new houses, that could be a big win politically, economically, if people get online and say, we understand that all of these resources, metals and minerals, they are key to developing this next generation of green energy and 5G cities and whatnot.
Okay, you mentioned earlier that there's more pain ahead for the markets. How much more pain? We're already down about 16%. The S&P 500 is down 16, 17% year to date. And I've heard speculations that potentially 50% correction is online. Some people are not as aggressive in their bearish forecast. Maybe another 10% will be the maximum downside. What's your outlook?
I don't necessarily think there's much more as far as percentage to come off the table. I mean, some of the companies might have some room, but I think we've been dealt a big blow. I think it just might mean that we stay here for a little bit.
Okay.
And there's enough caution, and that's not a bad thing, because once again, I like people to reevaluate, why do I own this? Right. And we can see the unintended consequences of some of the actions out there have been like energy companies are up huge. I mean, you see Germany, which is one of the greenest countries on earth by talk, also a major coal user. because they don't have a backup plan. They're not going to go nuclear. So you go, okay, interesting. You're not getting your natural gas anymore.
I was going to ask you, why are they going to go nuclear? That's been on the table for quite a while.
Yeah. So unlike France, who is going nuclear, and unlike China, who's I think they've got 48 nuclear reactors that they're building, they've decided that it's not the right path for them. Part of me, I've read one article that says that they're really going in on the green hydrogen side. So that's great, wonderful. If you've got a plan that's it. There's a lot of work that needs to be done on that side still, but this unintended consequences of trying to react to climate change, but not having a set policy in place, is I think some of the challenges we're facing.
I want to come back to oil. Now, you said that there are major risks involved with the markets. Let's drill down on, let's say, the top 3 major risks. You mentioned supply chain already. Aside from that, let's say I were an investor and I'm deploying new capital into the equity markets at large. And I know you don't like the indices. We'll touch on that.
Yeah.
But what are the major 3 risks that I have to be aware of, that I have to navigate through right now?
I mean, the one that we're seeing and everyone can see it now and admit is inflation. So that's the obvious one. I don't spend too much time on my presentation because there's going to be a lot of people talking about it.
Yeah.
Far brighter than I am and spend their entire lives on inflation.
You're a very humble man, Andrew.
But I acknowledge that, it's a theme. We got to take care of that. And something simple that people can do, and I try to talk to like mom and pa out there, is that buy more at the store now than next month. It might be only a few dollars, but inflation's here for a while. It's not going away anytime soon.
Buy more of what?
So buy more rice, buy more like your staple foods, just stuff. Not because there's going to be a food shortage that there won't be food.
It's interesting you brought that up, because that mode of thinking is not, you're not the only person to say that, but that's in itself sort of a self-fulfilling prophecy, because you're buying now and you're also pushing up prices.
You're pushing prices up. Yeah. It is, it's true. And that's unfortunately that kind of swivel we've kind of resolved around right now. What the hope is we can get something, and I try to keep politics out of it, but like a Build Back Better. Now there's lots of faults in it. But if you could get a plan where you get infrastructure, people back to work, and they're focused on a goal, right now, that would be amazing. So if we could get that level of commitment of money that the U.S. has, put it towards battery energy metals, nuclear, to energy, to rebuilding infrastructure, which is not doing that great, especially in the U.S., that would have a monumental effect on the country and also give nations a focus. And that is a key thing that we're missing right now. There's a lot of chaos. And in that chaos of people not being sure of what's happening is they don't know where to look. And then sometimes they go to very poor sources, and that creates more chaos.
Supply chain issues. Let's talk about that. What are the causes of the supply chain issues right now? It was COVID.
Yeah.
Is it still COVID, or is it something else?
That hasn't resolved itself. It's still COVID. I know that in China, there still is lockdowns there as well. There's a lot of ships just sitting there. Here, we don't have the same issue where we had all the ships sitting out there. So it seems to be clearing up to some extent. But I like, once again, supply chain where, like companies like Desert Mountain Energy that deals in helium, they are looking to be vertically integrated, and they want to be able to get out of the ground and literally deliver themselves to an end user. Now that, to me, and because they're very focused just on their specific market, is very attractive, especially for the short term. They don't have to worry about a shipping container. That cost has gone up something like 400 or 500% just in the port here in Vancouver.
Yeah.
So even Amazon is complaining, if you order something for $50, you might be paying $35 on top of that.
Yeah. Now, I want to come back to inflation. Inflation is a concern for, obviously, the everyday man who needs to survive and keep his living standards up. But from an investment perspective, how does inflation hurt the investor?
Yeah, well, I mean, you're being robbed of dollars, basically, in a sense. Okay. And I look at inflation not just as like the goods of buying, but just literally as M2s, money printing. And there's been so much. From 2008, we thought, oh, wow, it's a lot, to 2018. But in the last 2 years, the money put into the system is shocking. And there's a downside to that, and it's scary. And you hear a lot of people saying about that. But there's an upside in that. And there was a hint at COP26 where they said, we want to have 176 trillion go towards climate change objectives by 2030. Now that number is more than the market already. So you go, how's that going to happen? So to me, I hope and I think that the big brains over there at Goldman Sachs and JP Morgan and BlackRock and Vanguard, they have a plan that, yes, it's going to inflate, but that these new businesses have the opportunity to solve a lot of problems and will rush forward. So there is a possibility that they have a plan that some of this new energy, the supply chain issues, this interreaction of everything together could create a massive boom. That's not going to happen right now, but will come.
M2 is a double-edged sword, the increase of M2, because on the one hand, you've got the deflation of the U.S. dollar, like you mentioned, erosion of a store of wealth.
Yep.
But one could argue that this huge boom in equities that we saw 2020 to 2021 was because of quantitative easing and the expansion of the M2. So maybe investors don't want a decrease in the money supply right now.
It's true, and I mean we can see a sell-off in crypto because a lot of that money, especially for the young folks, went into the crypto side, which is interesting because we've seen that get hit, which I wasn't sure if we would see that, but we also saw gold respond a little bit negative lately as well, and that usually would be a safe haven for someone to say, listen, let's focus just on gold.
Yeah,
I think that's still the smart route. I prefer let's go commodities, let's focus on precious metals. Gold's got some room, silver certainly has some room. And also, I kind of keep in mind that when we're talking about a lot of retail investors, most of that money is in managed products. They're not necessarily managing their money.
Right.
And even their broker, not to be mean on brokers, but they just buy funds and ETFs. I mean, for the most part, it's managed product. That's most of retail money. So a lot of people aren't out picking stocks or choosing things. We happen to see it in our space, in the junior space, a lot because it's, it attracts that type of person. And there's a double-edged sword to that as well, is that you're going to be all in this together as it goes down and all together as it goes up. But what I'm suggesting is that's fine, that's great. A lot of people don't have a lot of interest in finance or investing. But today, there's some real gems out there and people can buffer this downside.
Okay, so you mentioned, let's go back to the risks.
Yeah.
Inflation, you've got supply chain issues. Let's say a third one, what would that be?
I'm going to say food shortage. Yeah.
I kind of read your mind there, but I wanted you to say, food shortage. Is that already happening or is that something that is about to happen?
No, that's already happening. And I'm very fortunate because I get to speak to CEOs all the time, and this isn't coming from me. We talk to phosphate producers and we follow that fertilizers segment because we saw years ago that they'd been hinting that there could be issues in supply chain, there could be issues with food. And upon talking to some of these individuals, they had said that for years they'd known this was coming. And they haven't been shy about talking about it. And of course, the issue with Ukraine then escalates this issue beyond control, because that's the breadbasket of Europe. But not only the breadbasket of Europe, it feeds the Middle East. Now, we're going to see some food issues, but not to the same extent that we'll actually see in a lot of developing nations. And that's where the real issue is. And when you take out the ammonia, you take out a lot of potash that comes from Belarus and from Russia, you take that off the table, that sector has done extremely well since September. And I see that going forward because we need to have people focus on these issues, and the capital markets is the best way to solve these issues.
Maybe it's time to buy fertilizer stocks.
I still like them. We've been following a lot. I'm going to be talking a little bit about like Nutrien and Verde and Mosaic, which are, those ones are some of the big ones.
Well, they would, presumably their stock should go up if the price of the underlying commodity is up, 2-3x?
Yes. Yeah. They've had exceptional returns since September for sure.
But just on that note, I read comments on the internet about farmers who are now cutting back on their phosphate and potash usage because of the price increase, but they're now kind of substituting that with cow manure, or more traditional methods of fertilizers. So maybe they're doing all right. Maybe, I'm not sure.
No, and there's something to be said by the way we farm. And that is something that it's an interesting fact that Bill Gates is now the major owner of land, of farmland, is that there needs to be a change in that as well. And this is where I like talking about this great reset, because if you take away a lot of the crazy kind of wild stuff, is that I think most people would say that it's about time that we had a bit of a reset on a lot of fronts. Whether that's going to be like a CBD, like a central bank digital coin, whether or not the US dollar will be the hegemony. How do we farm? We've just expected that we do things correctly and right, and that we don't think about it. I would suggest a lot of these basics that we've been doing haven't been running all that well, and the whole system needs a bit of a reset itself in order to really put us back on track.
Reset of what exactly, and where are we going?
Yeah, so I think that there's a lot of topics as far as farming as well. That there's a whole push on how to farm. This kind of industrial model is pretty hard on the land, and the amount of fertilizer it needs to reclaim that land. So there's talks on how to maybe do that a bit more green and efficiently. Of course, you would get into the whole we eat a lot too much meat, which there's truth in that. And also, as someone who's keen on their diet,
Yeah.
we don't need to eat as much meat. It's true, but there isn't a big conspiracy that we're going to be eating bugs and there's no more meat for anyone. In all these conspiracies, there's like a glimmer of truth. And that's where we kind of try to come in and say, listen, there's a probability to all of these factors.
Well, when people, you're not the first person to say that there's a possibility or even currently a shortage of food, especially in developing nations. But when people say shortage of food, the first image I have in my mind is complete famine.
Yeah.
Like just, famine just wiping out entire households, neighborhoods, impoverished communities just not being able to get by. Is that the image that you have in mind? Or am I going overboard?
No, that could be in some developed nations. I don't want to be the fear monger, but there is concern. I've heard comments to the extent of it's already happened, it just hasn't happened. Like the stage has been set. They're not getting the fertilizer, so they're not actually planting.
You'll recall the Great Depression,
Yes.
people lined up outside soup kitchens. You know these images, if you've all seen them. That happened in North America.
Yes.
That wasn't in Thailand somewhere. That's what, hypothetically, if we were to revisit that scenario again in America, in Canada, what would need to happen? A lot more? We're already on that path.
We're on that path. I talked 2 years ago and I said it was the Roaring *20s, the Great Depression rolled into one.
Yeah.
And I kind of said it's kind of happening to some extent.
We got 2 years of the Roaring *20s.
Yeah. So, but at the same time, it was a push of wealth into not the 1%, the 0.1%.
Right.
Your average person has done very poorly.
Sure.
And if you look at cities in the States, it's gloom. It's not good. A lot of places are suffering. It's just, if we're in the markets, it looks great. Mm-hmm. We're doing very well. Yeah. But it is not doing well in the economy, and most Americans are suffering, pretty harshly. If we don't resolve that, and a lot of this is political, and resolve a lot of political issues, and get focused on building and taking some action, we're going to be in trouble.
Let's talk about finally investment implications. Now we've talked about the risks. Let's talk about the sectors you do like. As you've mentioned, it's a stock picker's environment right now. It's not an index environment.
You know what? I always caution people that go talk to your advisor.
Yeah.
If you're not really into investing, then be careful. But for us, we like picking stocks. I like very niche sectors. Mm-hmm. People that do follow me know that I talk about helium. I have for years.
Okay.
It's really a blossoming sector. It's that high-tech coolant. So you need it for MRIs. You need it for nuclear reactors. You need it for any of your 5G cloud storage. You need helium to cool. You need it for Bitcoin mining as well. So it's not just party balloons, and we like that. So we like things like that where it's not thought of very often, and there's not a lot of competition, and it's growing competition. But we certainly, no bones about it. Desert Mountain Energy has a strategy, a management team, and they've hit their milestones. We're very happy with that, and we don't trade. We're in this for years. We also are really interested in a salt story. I won't get too much into that, but once again, it sounds boring. But it's amazing salts in almost everything we use. It's a lot of chemicals, it's in dyes, it's in leathers, and we see it in the battery side as well. So we like that. And also the boring part is the de-icing of roads.
What's the thesis behind a salt, for example? I mean, is it a huge industrial demand impetus that you're seeing right now?
Yes, and there's only 2 publicly traded salt companies, and one has, as I said, discovered but not built story, and that's one we like. So I won't get into too much about it because we're still in the kind of interest phase.
Well, generally speaking, what are the industrial themes that are pushing your thesis right now?
So it's battery energy metals. That's really, we've been talking about that for years, and we like that story because it gives people a sense of hope that you can be part of something to build towards a future that you want to see. Mm-hmm. So it's this, emissions and a greener day, and it's this vision that might be a couple years away, but we are starting to take steps. And for me, I say to people, if you don't want to give your time, give your money in the capital markets to companies and management teams that have a sound thesis and they're building this vision that we all want to see.
Perfect. Finally, where can we follow your work, Andrew?
So come to themarketmindset.ca and on YouTube as well. We love all the feedback, engagement. Ask us anything. We try to cover even just basic investment themes. But we really are advocates, and we really believe that although we're going through a chaotic time, there is still opportunity, and if we can have the right mindset to focus on these positive things, then good will come of it, and we'll make use of each day as it happens to us.
Okay, well, hopefully investors can glean from this conversation and steer themselves into the right direction. and not fall into the trap of buying everything that's going down right now. Andrew, I didn't know how to say that with a straight face. Andrew, thank you so much for coming on the show.
Thanks so much, Dave. I really appreciate it.
All right, and thank you for watching Kitco News. We'll have more for you from Rick.
Kitco News, special coverage of the Vancouver Resource Investment Conference, is brought to you by First Mining Gold.